Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, I missed you last week. I have to apologize. I'm sorry. My marketing coordinator was out on vacation, and I can do these recordings, but getting them out, that's for my marketing coordinator, so sorry that I missed you. I want to update you on a lot of stuff that's happened over the last 2 weeks because it's been pretty interesting. My title, again, was Goofy Math. And it all applies to the employment report, which came out last Friday, and I'll break all those down and let you know why things are a little bit goofy in that respect. Generally speaking, though, over the last 2 weeks, interest rates have done really good, and it's been primarily due to what happened with that employment report. So let's get into the numbers. So, employment data was released. It showed that only 88,000 jobs were added to the economy. Generally speaking, pretty weak number. We need about 125,000 jobs, they say, created every month in order just to kind of keep our heads above water, because they call that the birth-death ratio, that there's a certain amount of people who will retire and get out of the workforce, but there's a larger group of people coming in, those graduating from college or high school and needing a job. That's about 125,000, they figure, to 150,000 each and every month. So you need that number just to kind of tread water. We were below that number at 88,000 jobs, and that was weaker than expected. Now, there were two revisions to the previous 2 months, resulting in an additional 61,000 jobs over the last 2 months that weren't really recorded, that they now said, okay, they are there. So that puts the number closer to about 150,000. But generally speaking, still a pretty weak number. Despite that, the unemployment rate actually fell. It was at 7.7, went down to 7.6. So despite a pretty weak economic jobs number, the unemployment rate fell, which you'd normally think, hey, that's good, right? But why did it happen? Well, if you look at that labor force participation rate, which is the amount of people who are eligible or could have a job, that actually fell to the lowest level since 1979. It was at 63.3%. This is what happens, is that if you quit looking for a job in 4 weeks, you're off the overall number, so you're not included, you're not counted in that unemployment number. And so that's why it fell, because 500,000 people just quit looking for work over the last 4 weeks. They stopped. So the labor force participation rate is really a better overall gauge as to what's going on. So even though the unemployment rate fell, the jobs picture is pretty darn weak. And so that actually caused interest rates to rally, and we saw interest rates really improve over the last couple of weeks. And this week, we didn't really see a lot of economic data, and so they kind of maintained those levels. So overall, interest rates are still pretty good because, generally speaking, the economy is weak. Now, we saw the retail sales number came in, and that was weaker than expected, negative 0.4%, so shows that consumers not out there spending. Producer price index also came out. That was a little bit weaker than expected, which is good. That showed that inflation is really under control. And so inflation is interest rates' arch enemy, so that bodes well overall for interest rates. So despite the low numbers with the unemployment report, though, one thing that is kind of goofy going on is we're seeing the stock market rally. They're setting new records. Normally that doesn't really happen. Probably why that's happening is that, well, there's so much money being spent in the bond market by the Federal Reserve that a lot of investors just want to stay out of that. They're moving it into stocks. But stocks are ripe for a correction. So what does all this data mean here? Well, I think what it means is that we probably will continue to see interest rates remain at really, really low levels, at least into the summer. I don't think we're going to see any major movements. We saw, a creep up a little bit, but now, that's kind of stabilized. And I think we'll see interest rates continue to be amazing through the middle part of the summer, possibly to the end of the summer. Who knows? That's a little bit longer term threshold. But this is why. It's because we're just seeing weak economic data, low, jobs hasn't been that great. And we're also seeing geopolitical unrest going on in North and South Korea. We're also seeing, again, continued financial unrest in the overall global picture with everything that's going on with Europe. Cyprus isn't necessarily done yet. So I think rates will remain stable. Next week, we're going to see a lot of economic data that's going to come out. We'll have the consumer price index, which is the measure of inflation at the consumer level, which is the more important number, and a number of other information released. And I'll let you know what happens with that. So, hope you have a wonderful weekend. Hope you enjoy the weather. and enjoy the Masters. I always love it when the Masters rolls around because that means summer's right around the corner. And I don't know about you, but I'm looking forward to a little bit warmer weather. I'm a little bit sick of the snow. We do need the moisture, so that is good. But always love to spend a little bit more time outside. So hope you guys are doing wonderful. If you ever have any questions, please give us a call, and have a wonderful week. Thanks for joining me with Java with Jared. Bye-bye.